General risk disclosure. Trading financial instruments, including forex, futures, equities, commodities, and cryptocurrencies, involves significant risk of loss. Trading is not suitable for all investors, as it may result in the loss of your entire investment. Leverage, volatility, and liquidity risks are inherent in these markets. Before engaging in trading, carefully consider your financial situation, experience level, and risk tolerance. You should only invest money you can afford to lose. Forex and futures disclaimer. Trading in the forex and futures markets is highly speculative and carries a substantial risk of loss. The leverage nature of these instruments amplifies gains and losses, potentially leading to substantial financial exposure. This content complies with CFTC Rule 4.41. CFTC Rule 4.41 disclaimer. Hypothetical or simulated performance results have certain inherent limitations. Unlike an actual performance record, simulated results do not represent actual trading. Also, since the trades have not been executed, the results may have under or overcompensated for the impact, if any, of certain market factors, such as lack of liquidity. Simulated trading programs are also subject to the fact that they are designed with the benefit of hindsight. No representation is being made that any account will or is likely to achieve profits or losses similar to those shown. Equities and commodities disclaimer. Equity and commodity trading involves risks associated with market volatility, company-specific factors, and geopolitical events. While stocks and commodities may have a lower leverage factor compared to forex or futures, they can still result in substantial financial losses. Cryptocurrency disclaimer. Cryptocurrencies are speculative and highly volatile instruments. Trading cryptocurrencies involves additional risks, including regulatory uncertainties, security vulnerabilities, and lack of liquidity. Cryptocurrencies are not regulated by most governments or central banks, and their value may be affected by external factors such as news events and market sentiment. Regulatory references. In the United States, this content adheres to the regulatory standards of the Commodity Futures Trading Commission, National Futures Association, and Securities and Exchange Commission. In the European Union, trading practices comply with the European Securities and Markets Authority standards. Global compliance, content aligns with internationally accepted guidelines, but laws vary by jurisdiction. Consult with a licensed professional in your area. Past performance disclaimer. Past performance is not indicative of future results. Any historical results or performance shown in this content are for informational purposes only and do not guarantee future performance. Educational content disclaimer. The information provided in this video is for educational and informational purposes only. It is not intended as investment advice, nor should it be construed as a recommendation to buy, sell, or hold any financial instrument. Always consult with a licensed financial advisor or regulatory authority in your jurisdiction before engaging in trading activities.
All right. I don't know what I did with my cup. Anyway, I did most of the pictures. It's Friday. Wednesday's the low. I wasn't expecting this. Wednesday to be the low. I was looking for how to sell initially. Okay. Okay, is this flash playing now? It did. Yeah, boom, boom, boom. Friday, the logs. This is London low of the day. It happened at 3 o'clock, so perfect timing. H1, you notice how we retraced into that wick. And then retested the order block in New York session and expanded higher. Solid close above the high. Solid close above the high. This is accumulation. Also note how we used yesterday closing price to go higher in London, which is also the daily open price. Oh, it's not necessarily because it could be a gap. Here, it kind of played out how we wanted it. We retested. That was a CPI expansion and expanded from there. That's like pairing orders. It is. I should have took this because it's super clean. Here, no low of the day. London made the low. Asia held. London held. Um, each session low held. One side of delivery. Each session low held. And for the daily, we have Larry Williams Smash Day. That's a sign of accumulation. It could be manipulation or fair swing, like catch that early people. Next week is week 4, it's usually retracement. So keep that in mind. This, it's not it's not New York reversal. It's not London high or low of the day. It's just drop. It looks like 3 drives with a retracement. Asia, London, and New York. 3 drives lower. With I wouldn't call it a retracement with the small bounce. Yeah, it's not a real retracement. H1 price looked terrible. H1 on the daily finally took out that accumulation candle low. I want to see price turn around from here. This actually might be a longer, slower trade. This was execution, so not it's not a TGIF. Took a buy to target all-time high. Yeah. So what was I executing? London low of the day. Bias, it was bullish. Set up London low of the day daily profile. Trigger time and CSD at key level. Model, it was some order block model. Where's the file? Yes. And it was a 3-hour trade. And it was a London trade. Hold on. Oh, no, I got the chart is over here. Because I think yeah, this is it. I wonder if I can just link this, copy link to block. Oh, yes, that works. So I don't even need this. London. Bam, bam. Did this. This is all this system pattern here. And I closed in New York, so that's not really a New York trade. It was a London trade. No trade day. Let's move this up. No, no trade day. It's not applicable. Yeah. I learned about the narrative. Mhm. I trust London lows enough to go to sleep before going break even. What will I watch for tomorrow? Yeah, Friday doesn't need that. I'm gonna have to do the fine details of the notion eventually and kind of clean up like the parts that don't fit my flow. But that's that on that. Y'all have a good day. Peace.